managements of the IPOs that have now listed, the stocks that have listed. It is online retail software services provider Unicommerce has seen a stellar debut on the exchanges, listing with over 100% premium to its issue price, doubling from its issue price itself. Kunal Bahl, who's the promoter and non-executive director of the company, joins in to discuss the company's post-listing plans. Kunal, first up, congratulations. It's been a stellar listing. And, on a day where the markets are slightly wobbly, there have been a fair amount of takers for your IPO as well. But now with this solid listing that has happened, as they say in Superman, right? With great power comes great responsibility. We can say that for you as well. Great market cap comes great responsibility. We've got your numbers for the last 3 financial years. Now we're in the middle of FY25. How has the first half of this financial year been for you in terms of revenue as well as margins? If you could give us a directional sense. And what kind of growth are we likely to see for this year?
Firstly, thank you for having me on. And it's obviously a very humbling moment for all of us and our teams at Unicommerce. These are things you don't plan for or expect, but when they happen, you can only feel grateful. Unicommerce is a market leader in the e-commerce enablement SaaS space. So we serve 3,500 businesses that sell online. These could be digital native brands or digital migrant brands, traditional brands that have decided to grow their businesses online. And just to give you perspective, today India is at 4 to 5 billion e-commerce shipments, and China is at 150 billion e-commerce shipments. And that's the headroom left to grow for e-commerce in India. And given we are more of a picks and shovels company, where we are providing software to run their businesses at the back end, warehouse management software, inventory management software, and similar other softwares, as the volumes in e-commerce grow, we would anticipate that Unicommerce would be an index to that growth. Last 3 years have been good. We've been growing consistently at about a 35% CAGR. Obviously the growth is not consistently 35 every year because COVID years were high growth years, and then the growth has started tapering out last year, and we saw obviously a slower year last year in the overall e-commerce shipments. On a going forward basis, we anticipate that the e-commerce shipments in India will grow at about 25% a year on a CAGR basis. And historically, Unicommerce has delivered, an e-commerce market growth plus growth. But we've also been profitable, given it's a pure software company. We don't do any operations. We don't, manage warehouses physically. We manage them virtually using our software. And our software is priced on a per unit basis. So as the volumes grow, the monetization for Unicommerce grows.
All right. Hi, Kunal. First of all, congratulations. Solid listing. It tells you the kind of potential that shareholders see. But now delivery, as my colleague Mangalam said, is going to be crucial. So let's get to a couple of numbers. 25% is your estimate, I think, of the industry. And as you said, you have been delivering industry-leading growth. So should we presume that you will do better than 25% revenue growth for this year? And margins for the past year were close to around 13%. But there'll be an element of operating leverage as well that plays out. So where do you see this margin headed? Mid-teens in the coming year?
Sure. So thanks again. Look, we are only about 4 months into this year. We are seeing a slight upswing in the volumes from last year. However, we are not yet seeing the significant surge in growth we had seen 2-3 years ago. But we are not particularly perturbed about short-term volume growth in e-commerce, because at least the long-term story we are very, very clear is highly intact for e-commerce volume growth in India, which is really what Unicommerce's main engine for growth is. So if, for instance, this year the e-commerce growth is 10%, 12%, 15%, we should ideally be growing faster than that. But to the point of operating leverage, which is a very important one, it's an integral part of this business, because our fixed costs actually don't grow with scale. In fact, our fixed costs as a percentage of our revenue have been dropping. We do anticipate that a significant part of the incremental revenue growth we will see this year, as was the case last year, will grow into the bottom line and ensure that we are continuing to grow our margins. So yes, last year our PAT actually doubled from FY23 to FY24, And our anticipation would be that we would continue to grow the profit even this year.
All right. So, Kunal, so far what we've understood of your business and what you've told us as well, it seems like there are three major levers to drive your revenue growth. One would be the inherent e-commerce volumes itself. Second would be you adding more clients to your portfolio. And third would be you expanding the scope of services that you give to your clients as well. And obviously, the fourth will be the pricing power as well. All these four factors driving your revenues going forward. Could you give us a sense of, if, say, the e-commerce industry grows at a certain percentage, how much higher over that can you grow? And if you could give us a sense of the kind of client additions we're targeting, the kind of service expansion that you're targeting, and the price growth as well.
Right, absolutely. So, look, historically we've grown, give or take, about 500 basis points higher than e-commerce volume growth. So, for instance, in FY24, we believe that the volume growth was in the 8, 9, 10% range, and our revenues grew 15% plus in FY24. So, and historically also during COVID, when e-commerce was growing at 30, 35%, we actually grew 50%. But, there were too many extraordinary things about COVID that we don't anticipate that we can beat the market that much on an ongoing basis. We will try, but, obviously it's hard to pull that off again and again. Your levers are actually absolutely well identified. One of the biggest levers for us is obviously e-commerce volume growth, which we mentioned already. But in addition to that, there are many other things, many other levers in this business. One is new products. We've launched 2 new products in the last few months, and we are now in the journey of scaling them up. Because as we are realizing that the e-commerce, these e-commerce brands or brands who are selling on e-commerce are growing in size, the complexity in their businesses is growing very dramatically. And as the complexity grows, they can no longer work on a spreadsheet. They need software. And we ourselves are getting surprised at how quickly some of these businesses are growing and how complicated their businesses are becoming. And so it's really incumbent on our humility and our creativity as a company to go listen to these customers and understand what else do they need in terms of software products that we can build. And once we build a product, we actually go sell it to all our customers, the thousands of customers that we have, because we don't do any custom software, etc. It's a productized setup. We are also obviously in international markets, a lever that you did not mention. We are currently in 6 countries total, mostly in the Middle East and Southeast Asia. We currently have some good customers there, like Landmark Group and others. However, we will anticipate that in the future we want to sign up more customers in these markets.
Right.
Here, obviously the realizations are better, and the product is already built out.
Got it.
So the incremental profit growth from those markets can be significant.
Take that point, Kunal. Once again, congratulations. It's been a great listing. You've drawn open the growth programs for us. The street will now wait on the deliverance of the same as well. That's about Unicommerce. We'll take a short break, in fact.